Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you for having me today.
Well, Jerome Powell has been reassuring the world that they're going to stick with an easy money policy, but still a surge in Treasury yields spooked investors on Thursday, sending stocks sharply lower. On the Nasdaq, it was the biggest drop since last October. What's the story in the global markets?
Yes, Dow Jones was quite significantly down by 1.8%. S&P 500 sank about 2.5%, and particularly the interest rate sensitive Nasdaq was down by 3.5%. It is the worst declining since October of last year. As you said, the main reason for this kind of correction is because of the 10-year government yield, Treasury yield, has surged significantly for U.S., and it has hit well above 1.5% level, as high as 1.6%. Now has corrected a little bit, but still nevertheless right around 1.5%. I think that people are concerned about this number will go up even further with the economic recovery that is expected, and also $1.9 trillion of the boosting measures, the budget improvement in terms of the U.S. government. And if that's the case, then economic growth rate could quite significantly recover this year. And also various cost level is rising because of the overall oil price rising and various other raw materials rising. And that's the main reason for the expected rise in interest rate. And this is all affecting quite negatively for overall U.S. market, and it seems that it's actually having trigger effect to most of other countries as well.
Well, Korean shares taking a big hit today, too, giving up most of yesterday's big gain. Strong buying from retail investors, but foreigners and institutions selling. Tell us about the local markets.
Right. Right around 3,000 level of Kospi. Kospi seems to be quite volatile. If you look at yesterday, it was up 3.5%, and today it's almost down by 3%. So it's quite volatile right around 3,000 level. Main reason for that is because U.S. market are suffering quite significantly, particularly the Nasdaq down 3.5%, affecting negatively, and higher interest rate environment in U.S. does affect also the same level of rising trend for the Korean government bond rate as well. However, though, if you look at the Bank of Korea, they have kept its base rate unchanged at a record low level of 0.5%. And overall economic growth rate-wise, we are expecting quite significant improvement in this quarter because of the huge improvement in export, particularly in the semiconductor industry. And also, auto industry is actually doing quite well as well. And with the oil price rising, any export related to the oil price, petrochemical side is also going to do well. So all in all, we do expect the Korean companies' earnings improvement will be one of the most significant one compared to any other countries. And this is the reason why the recent correction will be just a short-term relative volatility rather than a long-term trend.
Well, you alluded to rates rising in Korea, which, like the U.S., many believe that's inevitable given all that's happened in the past year. But what do rising rates mean for the Korean economy, and what kind of response do we need?
Right. In terms of the rising interest rate, I think that the key concern is what's happening to the inflation. And we think that the inflationary pressure is not going to be that significant despite all these boosting measures that you are seeing. Number one, you continue to see the untech businesses flourishing, lowering the overall sales prices. And also, if you look at the labor market, the improvement level is quite timid. And due to that, the demand pulled inflation is probably unlikely. Right now, inflation numbers are going up because of the cost push inflation, raw material costs rising. But we don't think that that will last for very long unless there's a huge demand pickup. But because the labor market is still timid, we don't think that that's going to be the case. And that applies to not just the U.S., but also Korea. All in all, we don't think the inflation pressure is going to be so significant that interest rate will rise even more faster than what we've seen in the last 6 months. We think that the gradual rise to so-called 2% target inflation numbers will be most likely, and therefore the interest rate will probably go towards that number of 2%, but it will take quite some period of time, and government will do quite a lot of measures to make sure that the interest rate environment remains low.
Got it. All right, Mr. Yu, thanks so much for sharing your insights with us today, and as always, have a great weekend.
Thank you. Have a great weekend.